of Fiscal.ai, formerly FinChat. If you are a regular listener to these shows, you know that they have been a sponsor for a long time. Also, my employer, and just an all around fantastic platform to use for financial research. We are also joined by the one and only Brett Schaefer. But Braden, it's been a while since you've been on the show. Welcome back.
It's good to be back, boys. I appreciate it. This is live, right? We're live.
This is
This
live.
is true, yeah. Live recording. We only got a few
Awesome.
people that join us live. A lot more people listen
Hey,
to the actual recording, but yeah, we should get a few comments in here. And very happy for you to join us. I know you have plenty of experience in the podcast game as well. So excited to have a fun chat.
you don't need a huge audience. It's better to be well known, or sorry, it's better to be known well than well known. I strongly believe that.
I like that. And we're gonna dig into get a little expertise on the AI industry from Braden. But before we do, we want to talk about our friends at IBKR. Interactive Brokers, we were so genuinely excited when Interactive Brokers reached out to us because we were already using the platform and Brett and I loved it. The reason Brett and I chose IBKR as our trading platform is because, unlike other brokerage platforms, IBKR does not cut corners. Here are the 4 things that made IBKR the perfect fit for us. 1, they have 0 commissions on US listed stocks and ETFs through their IBKR Lite plan. 2, they make investing in international listings extremely cheap and easy. 3, they provide up to 3.83% interest on cash held in my account, so I no longer have to send money to and from accounts to get a high yield on my extra cash. And 4, they have an fantastic portfolio performance analytics, way better than most of the other platforms. When placing your money with a broker, go with a broker you can trust. Head on over to ibkr.com. Restrictions apply. Interactive Brokers is a member of SIPC. All right, Braden, I want to start with you. You have been running, I guess, Fiscal.ai now for, well, Fiscal.ai for like 2 weeks, but the bones of Fiscal.ai for what, 4 years now?
Yeah, we kind of started taking it seriously in 2022. Technically, the company was incorporated in 2021, but I was still working my job in that year, so it's a loose founding date. I like to say 2022.
And the, I guess, AI integrations and all of the stuff that Fiscal AI is powering with AI kind of started, I think, basically around what, 2023?
Yeah, that's right. The April 2023.
Okay, so give us your purview, the world of AI, some of the disruptive technologies. What are you seeing? Is there anything that has kind of blown you away? Any trends, mega trends that you are witnessing from AI generally?
Yeah, I'll tell you as a consumer, and then I'll tell you what I think about it as an investor too, and maybe helpful for the investors is my like unofficial timeline is that like wow moment in 2023, but then you're kind of like, this is not really in my workflow. It's like, oh, this is pretty cool for one-off things, impressive tech, not in my workflow. And then you had this next phase of chat with everything, chat with anything type of 2024 vibe, which was again not super in everyone's workflow all the time, but very cool for information workers, for example. And then the agentic world came along with like a 6 out of 10 usefulness rating with the potential to be a 10 out of 10, right? It's basically like, what if everything has a lot of intelligence, and instead of one agent working on something for me, I have thousands of junior level employees in the sky in a data center that work 24/7, unemotionally and unapologetically. And so that promise became really interesting. And now 2025 here in recording late June, it feels like 1995. And the reason I draw that comparison is 95, it was the year I was born, but that was when computing in the home and touching everyone on a daily basis started to really, really take off. It wasn't this like archaic, nerdy thing. You had like Windows 95 came out and it was like, oh my God, this is now in everyone's home, in every single knowledge worker's workflow constantly. That's what's happening right now with AI, where everyone is using it now. Like everyone is officially using it. And it feels a little bit like if you're not using it, it's like, in a few years, it's like, what are you doing? Slash, like, you're just showing up to work without the tools you need. Like showing up to your work without your laptop. So I think here feels a little bit more like now we need to have discussions around what disruption is going to happen. And the AI crosshairs are going after a couple like companies like Adobe's an easy target. I think those companies are trading at cheap multiples and they're going to start trading at cheaper multiples. So I want people to be a little bit careful with these names. That's like kind of my suggestion, honestly.
Yeah, I can attest to using way more AI in my daily life. I was a bit skeptic for the general chatbots back in 2023. I mean, they weren't as good yet, but I've ended up being a subscriber to Gemini. And hey, like everyone has their different use cases, and I've used it on a regular basis now and find tons of value. And of course, using Fiscal.ai in my daily workflow for investing. I mean, I like, for example, like the new product you guys came out with the AI generated research report. Is it going to do all my research for me? No, but it's a great start on a new stock, and I found it as a great, I don't know. It's very, very helpful. Now the question I have, there's so many different takes out there, so many different paths that all these smart people are imagining, and it seems like there's a lot of disagreement on where the whole space is going. What is one of these big ideas that people are claiming that you think has tons of potential? And then what is one where you think you have great insight into the insides of an AI company? Where's one where you think there's going to be bottlenecks here and it might not actually have viability?
If there is extreme repeatability in a process requires a mass amount of human capital for the job to be done, these types of companies are going to probably fundamentally change the most, um, both in knowledge workers and in the real physical world. Anything that's really repetitive and can be automated will go first. High skilled, high nuance, high edge cases, those are the things most insulated. But most of our world is not super nuanced and edge cases in these type of repeatable processes that people do a lot, especially with knowledge work, especially with automation in a manufacturing plant or in a logistics center. I mean, wasn't Jassy talking in their AGM like 3 days ago that basically their entire warehouse is going to be entirely AI in like 5 years? It's like,
Something like that.
wow.
Yeah, they want to.
Yeah.
Their number of workers is going to come down, and they're going to have a ton of robotics. I think they've talked about their new warehouse that they've been monitoring or prototyping in, I think it's Louisiana, that has way less workers, is way safer. It has a bunch of new robotic stuff. And then I guess the big picture one is if you can get them to have some smarter AI, uploaded to these robots that can make them even more helpful. But that might be a little bit too big, big of a brain take for me. I don't know.
No, I think you're right. I mean, like, what if everything has pretty general intelligence? That's an amazing breakthrough. And Brett, I feel like I'm like you, where because I listen to your guys' pod. I'm like you that has a natural skepticism in me. I've seen it in you. I have it, Henderson. You have it as well. I think every value investor does. It's like how we're wired. And this year, I kind of took the turn on this where I'm like, okay, I'm not just building a business where I think it's going to change. I'm like, oh, I get it. Like all these people who go on these panels and talk about how AI is going to change everything and bore me to sleep. Like it's so lame. It's like, oh, okay, I get it now. Like everything is going to change. Like, you know what I mean? As soon as you're really starting to adopt it, you see the Luddites of the world like using it constantly in their day to day. It's like, okay, actually, this is probably going to change the physical and the knowledge worker world pretty quickly here. I think that the big change here is that you have these products go from like 0 to 100 million in revenue so fast. And the reason for that is there's no training. They don't even have any documentation on how to use it. You already know how to use it. Like, think
It-
of like the next Autodesk or something.
yeah. I
These
think,
things you take so long to learn, but now you don't even have to learn it. It's crazy.
yeah, it's, I would say I've probably been one of the slowest adopters I know to using AI on a daily basis. And for the longest time, I thought like every people probably do the same thing. They hear AI and they just think of LLMs. Like they just think of like talking to Chat GPT, and they're like, well, it's not really that useful. Like maybe I'll swap out some of my Google searches for it. But it's all, like you said, the manual processes. Like if you are a lawyer or a paralegal or something and you're reading documents and all you need to do is extract three things from that document, get the person's name, details, info, where what hospital they went to, whatever, having an AI do that and just speeding up that workflow for you, uh, there's a million use cases like that where it's going to save people time and ultimately money as well.
Yeah,
Um,
and screw that work. Honestly, screw that
yeah,
work. It's going to be disruptive to people's lives and jobs, which I am sensitive to. But screw that work, man. Paperwork isn't work. I strongly believe that. Like,
It's not fulfilling. Yeah.
yeah, let the robots do that crap. That's not like that's. I don't think we were put on this earth to do that kind of stuff. So let the robots do it. But it's going to change.
Bringing it back to investing, I think the reason at the start people such as ourselves were maybe hesitant to go not all in on saying, "Oh, I'm just going to be an AI guy, blah blah blah, all AI portfolio," but more of just skepticism on whether the product's going to work is the few years before that, we saw these same people or some of the same people hype up the metaverse, hype up crypto,
Yeah.
and I know some people out there are still fans of those two things, but you saw a huge boom and crash and almost an entirely narrative driven thing. But over the last 2 or 3 years, we've seen actual progress within AI. And I think you got to, admit when that's happening.
Yeah, you're totally right. Like your guard's up automatically, of
Exactly.
course.
Yeah.
what are some of the quote unquote wide moat businesses? You already mentioned Adobe, which I think for a long time was considered kind of high switching costs, wide moat, and maybe still is by some. What are some of those stereotypical wide moat businesses that you think are at risk of maybe not entire disruption by AI, but at the edges losing some demand from AI?
Yeah, I think I'm almost now in the next stage of like thinking all of those things seem to be consensus now in terms of what's going to be changed. But what about the second order effects of intelligence in every device? How is car insurance going to work? How's that business going to work in 10 years when
Smaller,
ever
but more profitable, maybe.
maybe,
Yeah.
right? Like it's really hard to underwrite this stuff right now. And I don't think the market's at those second order businesses quite yet. It's really thinking high level at like the Uber Waymo dynamic. It's thinking about the and Tesla Robotaxi. Think about those items. It's thinking about Nvidia, ASML, TSMC is probably like the picks and shovels play of like everyone else fight it out, but this is the infrastructure. Um, those things seems to be pretty consensus. But yeah, like what's after that in terms of all of the businesses around them? I mean, I'd be interested if you guys have any ideas. Like, what does Geico look like in 10 years? I don't know.
Yeah, maybe boost the telematics part, or maybe there's big advances there.
Well,
The the
if there's fewer to 95 to 99% less crashes, that is going to make them more profitable for a while. But then I think there's going to be a huge reduction in premiums. So that could actually end up being a bad thing for them. Yeah, I don't know.
but a
It's almost like,
benefit for consumers.
yeah, and it could be a benefit for the companies if they are just that much more profitable. You still need to have, the government mandated car insurance. I think of almost the same thing with health insurance if Ozempic is, and all the, not just Ozempic, all the weight loss style drugs are actually as huge as people think. Well, maybe health insurance is going to get cheaper. Who knows? Maybe the insurance companies will pay for that and then hospital bills and stuff will come down. Yeah, that's kind of what I think. There could be tons of second order disruptions. And when I'm investing, I'm trying to figure out what's honestly not going to get disrupted.
Yeah.
So I tend to be very nervous about software right now, especially ones that I don't know that well.
I guess don't you guys have this kind of eeriness that you didn't have 2, 3 years ago about like your confidence in the future just being a little bit harder to underwrite right now? That's personally how I have felt on just finding new names and having a lot of conviction in anything right now. It's actually been a real struggle for me in my own personal portfolio, especially in this year. It feels a really, really difficult to have a lot of conviction in what things are gonna look like.
Yeah. I've
And it's
tended to move from digital to physical world a little more. I think software, I just get, same thing. I get nervous about software. But Ryan, what about you?
No, yeah, I mean, it's true. It also coincided with a lot of just multiples expanding across the board sort of throughout this year, which has kind of made it difficult for other reasons. I was kind of going through some of the same thought process of like not second order effects, but who are the picks and shovels provider? Who are some of like the hidden beneficiaries of like just sheer increase in AI spend? And honestly, all of them have pretty much caught, like, a massive bid. Like, you go
Yeah.
to the people selling the widgets to data centers or who's that company with Amphenol, basically? That's majority of their business.
Oh,
They've
right. Yeah, we looked at
trading
that
at
one.
a rich multiple. Commercial air conditioning companies
Mhm.
caught huge multiples. It's really hard, honestly, to find anyone that's just, like, a cheap picks and shovels provider to the industry.
My
But
one of our early investors, just like 20 minutes ago, he was texting me about Quanta Services, the $55 billion uh electrical engineering firm, basically. They're like just this big, huge firm. And that thing went from like 12 times EBIT to 40 in the last 3 years. But the backlog tripled. So, like, yeah, the entire infrastructure on the electricity grid is going to change. So even you're right, even that stuff has caught a crazy bid.
and it's
Okay.
it's it's
Or
not
go ahead,
too
Ryan.
surprising because you see, like, the fundamentals are changing for those businesses, and
Oh yeah. Yeah, the business has gotten much better. It has.
yeah.
Okay,
Alright.
we have other topics we want to get to, but we have a fantastic question from the audience that I think you, Braden, and Ryan too, working at Fiscal AI, have a great overview and insight into what might be an answer here. Tyler asked, "What do you guys think are going to be the biggest changes to the equity research roles given AI's new use cases?"
You
Braden,
wanna go first,
Ryan,
Braden?
I don't know, whoever
I
wants to
I
go.
I can take that. I mean, right now we're building a lot of things that allow an analyst to do it goes back to the like save the paperwork for the robots a little bit. Data aggregation should be done properly. Now that there's reasoning on the AI where it's not just going to extract the data and dump it to you, it's actually going to give you it in the right structure for each type of industry, standardized, as well as like the as reported stuff done correctly and accurately. So aggregation that you can actually trust, because traditional ML techniques before couldn't really solve that problem. That's why a company like FactSet has 9,000 employees that manually collect data. We're going to eat their lunch with what we're doing. For example, um, so aggregation, client communications are obviously changed. I mean, every analyst is already using that. Ramping up on new names qualitatively is amazing. Having like a really smart sparring partner um, with AI right out of the gate. Having like an associate level right beside you. But what that's going to allow you to do is have more value at the firm, likely less roles, likely more demand for you to own more of the stack and own more names potentially too as an analyst. But the people who are jumping ahead of that and really actually kind of embracing it, I could see this being really beneficial to their career. But if they wait around, it's not going to be.
Yeah, the I think a lot of the manual work or a lot of the like if you had people that were quote unquote equity analysts that were really just kind of creating slide decks for people, and that kind of work is probably going to get automated almost to completion. Like maybe you need to do some editing on the slide. If you're preparing some sort of deck for client, whatever, I think you can do the majority of that automated. As for the actual individual equity analyst, I'm not sure a ton changes other than like solving some of your workflow, so getting up to speed on a company faster. And I saw this take, I don't know, 2 years ago, and I kind of think about it a lot, which is as the world leans more and more on AI, especially the analyst world, and there's increasing algorithmic trading where things are just reacting quickly to numbers. People are maybe shortcutting some of their research by using AI potentially. The independent thinkers, the people that really sit down and listen to the calls, read the transcripts, and think for themselves in a world where everyone's sharing ideas and everyone's using AI. I think they can find more meaningful differentiated views. There'll maybe be larger mispricings or larger swings uh, in individual stock prices because of, I don't know, AI kind of maybe helping group think a bit.
Yeah, and that also adds to, on top of that, the passive investors. I think that's another, when if there's so many people that outsource their thinking to either passive or, in what Ryan's example, anything AI related, that will enable, the fundamental focused investors to utilize these new AI tools to have actually better insights. And yeah, I think I've seen it too. Um, just stocks trading wildly on random news stuff. And I always think, are people really this manic? And maybe they are, but I also think it's because a lot of people aren't thinking, and it's a lot of it might be automated.
Probably is. There is probably a lot of just like pure, not people actually trading those securities. I'm thinking of, and this can move to one of our topics, but I'm thinking of the HIMS and HERS news that led to a 30% drop in like seconds. Do you want to
Yeah.
go through
Do we
some of
want to?
that?
Yeah. Should we move on? Talk about this one first.
Sure.
Yeah, let's do
All
it.
right. So HIMS and HERS versus Novo Nordisk. I got the notes for this one. Here's a quote from one of the financial newspapers. Novo Nordisk abruptly ended its partnership with HIMS and HERS after the Danish drug maker accused the telehealth company of illegally selling cheaper copycats of Novo Nordisk's weight loss drug and engaging in deceptive marketing. So Novo says that HIMS has the deceptive marketing out there and is putting patients at risk by not having this patented GLP-1 product, or sorry, having a non-patented GLP-1 product on their platform selling right next to, their flagship product, Wegovy. And HIMS is saying, is trying to argue that it didn't like that, which I thought it was funny that they just didn't like it. It's like, well, I think it's the law, guys, but they didn't like that Novo wanted to steer patients to Wegovy regardless of whether it was truly the best option for them. HIM stock, as Ryan mentioned, collapsed on the news. I don't have the exact figures, but I think 30-40%. And even though, so a little context here, because there was shortages of these GLP-1 drugs, I think about a year ago, HIMS and HERS and other telehealth providers were able to get cheaper products because of the shortage due to some law out there. If there's a shortage of a product and people need it in the pharmaceutical industry, um, they let other people manufacture it to catch up to demand. But now that even though these shortages are over, HIMS continues to make these knockoff versions of Wegovy and selling it at a discount. I guess I have a tweet here where it kind of shows how angry Novo Nordisk is. This is from an anonymous account on Twitter. But essentially, they have this press release, and I'm not going to read the whole thing, but it says HIMS and HERS has failed to adhere to the law, which prohibits mass sales of compounded drugs under the false guise of, quote, personalization, and are disseminating deceptive marketing that puts patients at risk. And when companies engage in illegal sham compounding that jeopardizes the health of Americans, we will continue to take action. Okay, that's a lot of info. What are you guys' general thoughts here?
Can I
Did you
can I
follow
ask
this news at
can I
all?
ask a basic question about this company? Because
Sure.
I don't follow it too much, other than I know it's been a hot one and cult like followed a little bit. Are they making their own products, or are they just a distribution business?
They work with manufacturers for generic drugs, so balding stuff, Viagra type stuff, stuff that's generic. But then they also work with someone like Novo Nordisk to get these drugs. They're not necessarily making anything novel. You might see them talk about their new quote unquote product, but it's not a new drug. So they just released for the HERS side, I think it was this chewable gummy that had one of the balding medications plus biotin in it, which is really just combining two things together and putting it in a nice marketing package. So their edge has been we're really good at marketing, we're really good at getting people onto their subscription services. We have nice branding, but we are just selling generics over the counter. And I guess another reason that they have been successful is that they use fairly cheap, generally stuff that's fairly cheap and avoid the insurance. So if you're gonna, if something's $30 a month, it might not be worth it to go through insurance. So that's been another loophole. Yeah. So I think hopefully that answers it.
Tyler says plus or minus 30% is like a typical day for the HIMS shareholder, which certainly has been lately. The thing for me about this is, and this kind of gets to, I guess some of the, I feel like there's just been a ton of frothiness overall in the markets over the last, specifically like the last month or two. And it's not even that quality stocks are trading at expensive multiples, although I think a lot of them are. It's some of the like most fragile business models that are getting extreme multiples. Like,
Or no business models.
yeah,
My nuclear stocks.
there are some pre-revenue businesses, which not all pre-revenue businesses won't have revenue in the future, but like there's inherent risk there, obviously. And in this case, like if a press release from one customer can take your stock down 30% in seconds, like I think you got to ask some serious questions about the validity of the business model.
Well, it seems to me that HIMS and HERS just is thinking that patents don't matter and they can just ignore it because these drugs just came out. They're still on their patents. Novo Nordisk, I got the numbers from Fiscal.ai. I should get a drink there. I have to drink. Novo Nordisk spends $6.5 billion on R&D annually. HIMS is at less than $100 million. If you want Novo Nordisk to spend $6 billion a year on drug development that could turn into these weight loss drugs, don't you need them allow them to have a profit? I don't know. I was talking with someone that's been on the show before, Paul Serro, who follows this name closely. And I kind of just asked the question, like, well, doesn't the patent matter? And he said, that's what every investor's saying. So seems to be they're in a tough spot and kind of pretending there's no issue when they have this, what I think Novo Nordisk has a market cap in the hundreds of billions. This company is going to come after them and it could be, I wouldn't say fatal. That might be too aggressive, but it could be terrible for this business.
Yeah, and it's like one of those things where that huge R&D spend or huge capex spend of businesses is both the bull and the bear case, like 9 times out of 10 for these types of businesses. And either way, you're up against a massive gorilla. And in these types of disputes, the most stubborn party always wins. And you're allowed to be more stubborn if you have more capital.
Yeah.
So it's a tricky situation. I hate owning companies with supplier risk.
Yeah. concentration in like one or two suppliers.
Hate that. So, I don't know the business too well, so I'm not going to comment more than that. But generically, that's my approach.
Yeah.
Yeah.
I
Go ahead,
I
Brett.
I said we did a research report episode on them last year, and I said I liked the stock but wasn't buying, and now it's up about 4 times since then. I still would say the same thing today, is there's risk from, one, management being very aggressive in an industry where lawsuits could get them in trouble. I've seen people say that they're selling essentially with fake doctor consultations, drugs that can have side effects, some of these generic drugs, like the balding medication. That could lead to a class action lawsuit if they don't get their everything in order. And another thing is that they technically don't have any IP. They are selling the same product that all those other ones that get marketed to people our age. Yeah, I don't know.
The
It's
bear
growing quick,
case,
but
the bear case is that the business is manscaped. It's the same.
Mhm.
It's the same product that everyone else has with louder, fancier marketing. And
That's a
and
great analogy. Yeah.
these types of businesses, you got to give it to them. Like there is an actual skill to distribution. 100% distribution, execution. There is a complete skill to it. Not everyone can do it. So I hate knocking on that. It's like, it's just distribution. There is skill to that. It's just not my style of investing. That's really tricky to own it long term.
I agree.
All right. I've got a couple topics that I want to jump to. People want to know what would cause you to sell Constellation software, Braden. But before we do, I want to talk about Blue Chippers Club, one of our sponsors here. This was started by two friends of ours with the goal of building a tight-knit community of stock-focused investors. We've already seen a ton of people join, and in this club, you can break down your portfolio, pitch stocks, receive feedback. Brett, I saw you recently through your real brokerage write up into Blue Chippers Club.
Yes,
There's
I did.
also weekly calls that you can participate in. It's honestly just a great tight knit community for investors if that's what you're looking for. Head on over to bluechippersclub.com to hit apply. Once again, bluechippersclub.com. The link will be in the description. Brett, I interrupted you there. I saw your write up on Blue Chippers Club. Any
Yeah.
thoughts?
Yeah. What do you mean?
Which company
Any
was
thoughts?
it?
Is real brokerage?
It's a cloud-based brokerage. I don't know if it's a business model that's too widely known, but essentially it's just software and a brokerage that allows real estate agents to kind of become their own brand, or teams of agents to utilize them without going to some of the big legacy players in their area, and they're growing quite quickly. Yeah. I don't know. Bought
And you're a
some for the
shareholder.
portfolio. Yeah, I'm a shareholder now. Ended up buying, and yeah, one of those where, it's not a huge position today, given it is I think a micro cap, maybe just a small cap, fairly risky company, but I think there's a lot of long-term growth potential if they can hit on some of their key growth strategies.
Okay, where do we want to go next? I've got a small cap of the week that I do want to talk about at some point, but Braden, let's talk Constellation software. As of your latest portfolio, your Fiscal.ai, formerly FinChat portfolio update, you posted your portfolio on Twitter. I think it was about 38%.
Looks the same as every update, doesn't it?
Well, it was, I think, around 38% of your equity portfolio. So someone
And that
asked,
doesn't include the two spin-off companies, which are another like 8%.
oh, really?
Yeah.
What were the
In
two?
Topicus and Lumine. Yeah.
Lumine.
Yeah.
What would, or is it possible for anything to happen to cause you to sell your shares in Constellation software?
Oh, 100%. I mean, I love the company. I love the management team, but I'm not married to these things. I'm an investor to make money. I'm unapologetically, position myself like that. Now, I hope to never sell a share. That's my vision and my goal. But if there were to be a material unfolding of my thesis, then yeah, I would happily move on from the name. I haven't seen anything that has caused me to do that. And I typically, if there's some unfolding in my thesis, it's not like I wake up and sell the whole position. I just don't operate like that. I like to see a few quarters of like, oh, I'm wrong before I snap decision that I'm wrong. Look, they are a acquisition machine at scale, and they have a massive backlog of companies that they can continue to acquire. There is more competition in what they're doing. They have talked a lot about these types of copycats. They're all over the world. That doesn't mean they can execute at that same level and have their tentacles as they do across all these different potential acquisitions. I mean, look, they are very, very good at what they do. And if something was to happen to the company, or if Mark Leonard was to move on and that special sauce falls apart, then there's lots of other good companies I can own in my portfolio. It doesn't have to be Constellation. The reason that it is such a big part of the portfolio is I have not added to it at all, and it continues to maintain about a 40% position while I add fresh capital to everything else. I mean, so the real story is, this is the real story of Constellation Software, okay? I owned a very small position in the hundreds, okay? Share price. It's about a $5,000 stock today.
That's phenomenal returns.
Phenomenal returns. Yeah, it's just a beast of a execution. About slightly, maybe a little higher than that position. I'd have to check on what the exact price was, but this is what actually happened. Okay, so I worked for the government, and I cashed out my pension because it was either like, here, you can get $40 a year when you retire, and when in 40 years, or you can cash out about 70 grand today. I cashed it out, moved it to my brokerage account, and in one trade bought Constellation Software. One trade. It was basically all of the money that I owned.
What year was that? Do you
and I
remember?
never looked back.
Do you
That would have been 2020.
Wow.
I owned the position well before that. I've probably owned the stock for probably 10 years now, but that would have been like it moving from like a 3% position to like, at the time, like I was 24, 25, like 70 grand was probably, maybe half of my net worth at the time. So yeah, it was considerable for me at the time.
And it's done so with minimal volatility. The drawdowns are pretty small in that company.
Let me double check this on Fiscal.ai, but if I'm not mistaken, they have never had, or maybe in like 10 years, they have not had a 25% drawdown.
That's correct.
Yeah.
That is
Yeah,
wild.
wow. Since 2006, they
Since
have
IPO.
never had more than a 22% drawdown.
That's right.
That is insane.
Stable shareholder base.
It's a very, very patient shareholder base. The shares don't turn over. People kind of just hold it as long as they can, right? Like, it is definitely one of those stocks. It only trades on the TSX. It's not caught the eyes of people kind of in and out of it. The shares are $5,000 each. Most people in Canada can't fractional share it, so you don't get the retail base. It's a lethargic shareholder base. Types of people I like hanging out with.
I mean, that was kind of early days Berkshire. Obviously, there was no fractional share selling, and I always get them mixed up. The A shares were trading at whatever, a steep cost, and people would they weren't going to split because they were like, we want this to be a commitment. We want you to actually like not just mindlessly buy a share, but like you have to commit some real money to become a shareholder. And I would say, I'm guessing most people can't buy the fractional shares today for Constellation, so it's probably quite similar.
You attract the shareholders you deserve on a long horizon.
Yeah. And Mark Leonard's done a good job of that by more often than not saying nothing.
Yeah.
by
true.
just being
Yeah.
mysterious.
Look, I mean, there are there are two people that I think have understand human incentives best in the entire world. Charlie Munger, Mark Leonard. I don't
Yeah.
I those two guys understand human incentives better than anyone else, and they use that to make billions of dollars. Like I truly mean that. Like that that is the entire business model. It's
Yeah.
understanding incentives.
I just wish Leonard could, teach his wisdom more publicly like Munger, but maybe when he gets older, he'll do that. Let's talk your small cap, Ryan. Abercrombie and Fitch.
Yeah,
Huh?
this might be a is this a thing in Canada? Is that a common brand in Canada? Yeah.
I think it's the same as far as I know, the same story as in the US. It was really popular when we were in like high school. It died and now it's back. Is that the right story?
Yeah,
Yeah, same
it's
thing.
it's about right. So people have probably heard this name. I'll say I thought they were bankrupt for the longest time. I just assumed they were bankrupt because there was a mall-based concept. It was traditional retail. Investors hated it, and apparently they've had a whole bunch of near bankrupt uh, or gotten near collapse. Anyways, today $3.8 billion market cap. The stock is up roughly 5x over the last 5 years. They uh, got a new CEO and basically started this turnaround strategy in 2017. Let me make sure I get the name correct. I don't know if I have the name here, but a woman CEO, she took over in 2017 and she basically decided. So they own Hollister and they own Abercrombie and Fitch, which if you grew up as like a teenager from 2010 to 2020, those felt very similar. It was just like the cool kid, fashionable mall store, and they had basically merged into sort of the same brand. And so she came in and said, "Look, we need to turn either we need to mesh them into the same store literally, or we need to change the branding around them." And so Abercrombie basically became sort of the store for busy millennials, and it sounds really easy to just like, "Oh, we're the store for busy millennials," and, like, give it lip service, but they did a lot of, like, small tweaks to really change the store format, like, they really optimized for online buying, so that people could kinda come in, and get their stuff really quickly. They changed the inventory or the merchandise to kind of cater more to that audience. They're I don't know if you guys remember this, but they used to have, like, just really dim lighting for some reason in those stores. They changed that.
And just
Uh
cologne everywhere. Just
Yeah.
you can't even
Yeah.
breathe. It's yeah, I remember.
So they've revamped the model there. Hollister sort of has that same vibe still, of kind of catering towards the teens that wanna hang out and shop, but Abercrombie has really renovated, and it's apparently that along with some other operational changes, they cut a bunch of underperforming stores, and apparently, it wasn't like the stores were in terrible locations, but they were just 3 times bigger than they needed to be. So they're like, "Look, we can't shrink it down, we gotta get rid of it." Or in some cases, maybe they were able to get a new location or a new place in the same location. But basically, it's changed the profitability on a per store basis in a huge way. So rent costs have come down. I created a custom metric with Fiscal.ai, shout out to them. They've got store count, and then they've got I just used operating income divided by the total store count, and it's basically gone from if we go normal year, February 2020, they were generating about $160,000 in operating income per store. Today, they're just under $1 million in operating income per store. They have now had 9 consecutive quarters of positive comp store sales. They traded an EV to EBIT of 6 times. Yeah, Brett's sharing the screen here. And it's I have, like, a no apparel policy. I think Brett and I have developed, like, stay away from apparel at all costs, but they have bought back 12% of or they're on pace to buy back 12% of their shares this year. Any interest in this concept?
EBIT of 6 seems like a fair price for an apparel company. It's just tough out there. I was thinking this whole time, well, I don't even know that maybe they're targeting a different audience. Maybe I don't know if it's like if it's gender different or gender neutral. But I just think, if you want cheap stuff, go on Amazon. And then there are all these other brands that'll just give you 80% off, throw you coupons that you can buy stuff online if you want apparel. And it just seems like a highly competitive industry that is getting even more competitive every year because of the internet. And then you have the forcing function of Amazon. Yeah, 6 times earnings seems fair. Yeah.
But hey, that was before they started ramping revenue per store and operating income per store. It's been the same issue for a decade. I think something is working here. Go ahead, Greg.
Henderson. None of this matters. Okay, none of this matters. Is the company cool right now?
Yes, I think it is.
In 10 years, it might not be.
Exactly, and that's why fashion is impossible. But operating income per store, like, who cares? Like, is the brand cool right now? We're talking about a, apparel company, Abercrombie. It's cool right now. They're helping people go from like, my wardrobe sucks to it's fashionable again. I've been using that to like ugly myself, like in my closet. And my fiance is very into fashion, and she's been getting me stuff from there, and it's good. It's a bit fast fashiony for sure, but the price is like mid tier. They probably make some decent margins on stuff, and you go in there and it's like you can get some stuff that will like make you look like you're part of the newest thing, right? And they jumped on this newest thing, which is like back to 90s fashion before everyone else, and that's why they're crushing it.
Yeah.
But this thing will go out of fashion soon, and if they don't get it before the next thing, it's the same fate of every apparel company. But the forward returns on this stuff, Henderson, none of that matters with this. Like, it is literally just, is it cool, and how long can it be cool?
Yeah.
Yeah.
And I got zero insight for you.
Yeah, exactly.
Brett, our resident fashion expert.
Yeah. Hey, yeah. I'm not that much worse than you, Ryan. Come on.
That's true. Yeah, honestly, as much as I will say, good for them. Totally did not see this turnaround coming.
Yeah,
And
really well done.
Kudos to that CEO for actually making themselves cool again. But yeah, I have no interest. Like it could be like 3 times earnings.
What's the market cap?
3.8 billion.
Yeah, 3.8. EV 4.2. But that could include operating leases.
Anyway. All right. Well, there's our small cap of the week. If you like investing in apparel, I'm sorry for you, but also this could be an interesting concept to look at.
Yeah, I saw that Lululemon is almost going to hit the same, speaking of apparel and companies that go out of style, which that's a huge debate among the investing community right now. It almost has the same multiple as British American Tobacco. They're converging since, I don't know which one deserves that.
One's a growth industry. I'll let you decide which one.
Yeah, exactly. All right. You guys want to do a bubble watch?
Yes, but before we do, I should mention for small cap of the week and for all your stocks, Fiscal.ai has all the data you need and more. And you can use our code or our link, Fiscal.ai/chitchat to get 15% off any paid plans. Bubble watch. There was a lot to choose from this week, Brett.
Yeah,
what do you have?
I'm going to choose one that was floating around online. I'm just going to read this article from Bloomberg and see what you guys think. Quote, a footwear startup is teaming up with 2 space companies to design a shoe in orbit as part of a mission to make artificial intelligence and blockchain less expensive and more eco-friendly than it is on Earth. Orbit's Edge, a company that supports AI and blockchain applications, and Copernic Space, which offers digital marketplaces for space assets, plan to send a solar and battery-powered satellite to space equipped with a computer that will use AI automation to produce a shoe design for the Scintilla brand. The mission is expected to launch on a SpaceX Falcon 9 rocket in early 2026.
I don't know what any of that means, to be honest. I did not follow that.
It just smash all the buzzwords you can into one press release. Profit.
Yeah.
It's a
Send it on
publicity
a
stunt.
Falcon 9. Those are cheap. Those are cheap missions, I hear.
Yeah, that's a nice. I sure hope the PR stunt is worth it, because that's not cheap if you're taking a Falcon 9 rocket to do it.
Yeah. Well, I was really interested to see if these companies were public, but I don't think they are. Yeah. I don't know. I got no thoughts either. Just kind of whenever there's a new technology or something like AI and it turns into a narrative, there's going to be all these copycats. Remember Long Island blockchain? Long Island IST changed themselves to blockchain. That was the new narrative. That
Wait, what was
there's
that?
going to be all these companies that are trying to, they don't have anything and they're going to try to just take advantage of this narrative to raise money.
I'm sorry, what did you say about Long Island iced tea?
Yeah, do you remember? This was 2017. I could be misremembering it, but Long Island Iced Tea changed their name to Long Island Blockchain. Yeah. Yeah.
All right.
Yeah.
What other bubble watch do you have here?
We have, well, I don't know if this is a bubble watch, but I thought this was a crazy story. And it's not really that investing related, but it's a big investment fund. The co-founder of Jane Street Capital admitted to accidentally funding a coup to overthrow the South Sudan's government. Robert Guarnieri, the co-founder of New York-based hedge fund, said he was deceived into funding $7 million for the purchase of AK-47s, Stinger missiles, and grenades. I don't want to mention the people he gave the money to, but both to people that were accused of scheming a South Sudan coup in March 2024. So if you think about you're making a mistake with your job, just, you didn't make the worst mistake this week.
How do you accidentally do that?
They tricked him into thinking it was a nonprofit, apparently.
Wow.
Maybe
Yeah,
it was. Maybe it was
that's
technically a nonprofit. Yeah.
that's a hard one to
It
come
was a
back
crazy headline.
I see people get scammed with like a crappy course for $70, and then I see this, I'm like, take that as a cheap lesson.
Exactly. Yeah, you
seriously.
could be doing much worse than this guy. Yeah, with a guilty conscience. I got no other thoughts on that too, but here's one that I think is an actual topic that maybe you guys have some thoughts on. It's probably one of the biggest news items from the week, and that's the Tesla Robotaxi launch. They deployed a small amount of self-driving cars in a portion of downtown Austin. Everyone pray for Ryan's safety as he is within the vicinity of these vehicles. I looked at the map on Google Maps that they gave for their geo-fenced area, and it looks like you can drive across in about 20 minutes. So it's not a huge portion of Austin's downtown. The company claims this is the start of bringing the product national, although most industry experts are highly skeptical. And we're already seeing a lot of edge cases. I guess there's a video of, I don't know to play the video, but they paid an influencer to take a ride in the vehicle, and she was trying to promote it. And some sunlight hit the cameras, and then it started jerking around and going a little crazy. And
Like
it seems to
slammed
be
on
a
its
lot of
brakes.
these.
Yeah.
Yeah.
I saw
Brayden,
one. I saw there was. I mean, a lot of I think it was like basically YouTubers or maybe Tesla shareholders that were like really the people riding around on this, because I think it was like a Tuesday during the day when they launched this, which I imagine most people were working. And it just veered into oncoming traffic. And they were like, oh, okay. Well, that was one error, small error. It's like, that's a pretty big error. And Austin's relatively easy to drive in.
Yeah, that's why I think that was Waymo's first testing ground. Now, Brayden, Ryan and I have talked about the self-driving stuff ad nauseum, Waymo, stuff like that. Listeners know
It's
our
big
takes.
topic. It's worth this.
Yeah.
It's worth it. Yeah.
So listeners know our take, but I'm curious, do you care about it as an investor? Do you look at it? Do you have any hot takes on the industry? What are your thoughts?
Yeah, I care about it a lot. I mean, I've been an Uber shareholder for give or take 2 years now, I want to say. A company that I never thought I'd be an investor in when they IPO'd, but things change, facts change your mind. And looking forward to what's going to happen and the impressive execution of Waymo and this kind of forever incoming Robo-Taxi launch, which I guess last weekend they did it in this kind of small test case. There's going to be a lot of critics for this technology when things go wrong, and there's going to be the video, and there's going to be the lobbies against this, and it's going to be a very contentious topic, and there's going to be a lot of people who are kind of not in my backyard types who will never want to adopt this and never trust it themselves. And I get all of that, but I live in Toronto, one of the most congested places on planet Earth when it comes to traffic. There are some horrendous drivers. And I see these videos of like a Waymo take a wrong turn or like, accidentally cut someone off. I'm like, that's like a 9 out of 10 compared to what I see on an average day. So I am very pro this stuff, especially if it can get people places faster and cheaper and more safe, because the stats are the stats. It is more safe, and human drivers just suck. They're always on their phone. People are just constantly distracted. I live down in Florida this winter, and where I live, people are scrolling on their phone and doing stupid stuff, but for the most part, it's very frowned upon. Dude, I swear people are like watching Netflix in Florida while they drive. Like, it is just,
That's Florida.
people are just hands out driving out the front windshield, like just shameless. And
no rules down there.
yeah, and it's scary. It's honestly scary. I just think to myself, like, this is so obvious that it should be done with smart technology instead. And it's coming. I'm especially excited for it to come to commercial long transport logistics as well too, because that's going to come as well too, not just like the kind of Uber taxi
That could be the
types.
long game with Amazon and their ambitions there.
100%.
So you're an Uber shareholder, maybe that was in the past. I don't know if you are today.
No, still am today. Yeah.
What are your thoughts? It's another one that's turning into a battleground stock. They're partnering with
Definitely.
Waymo, but people see the risk. How have you been looking at it?
I've had to think about the use case and distribution of how things will change over time. I really, next time I'm in California, I want to just go to the Bay Area and order one. I've never been in one, and just understand the process start to finish. And then I really want to understand these cases where they're using Uber for the distribution. Like, is that the case in Austin right now, Henderson, or is it?
Yeah, it's exclusive on Uber.
It's exclusive on Uber. I haven't been able to figure out exactly what's in the mind of the Waymo CEO of what they think distribution looks like in 5 years from now. I would love to be able to tap into that. And that's why it's a battleground stock, because no one really knows. It's like they have this area over here where it's completely autonomous. All the distribution's done on their own app. They're rolling out in Phoenix and Austin exclusively on and other locations. It looks like someone in the comments here in Atlanta through Uber. I think they're going to be doing Miami on Uber as well too. And that makes sense. You get instant distribution, and that's the Uber moat speaking. And then you go to like where it started in California, and it just completely bypasses the rails. So it feels a little bit like a Visa MasterCard situation where there's a new payments network being done. And in some areas, they're having to use Visa and MasterCard. And in some cases, like Asia, where they're completely bypassing the rails. That's the parallel I'm thinking of. I still own the stock, and I'm still bullish on the stock because so many places they will need to be the rails. But again, the same way I got into the position, I may change my mind over the next few years. I haven't been adding to it, even though the numbers keep getting better. I haven't been adding to that because, like the beginning of this episode, underwriting that with technology, I just don't want to get smacked on the wrong side of a secular trend against me. That is the easiest way to lose money, to be on the wrong side of a secular trend. I don't care if it's cheap. I don't care if the fundamentals look great on a historical basis. It doesn't matter. If something's trading at 20 times earnings and you're on the wrong side of the secular trend, you're going to own it at 12 times earnings and lose a lot of money and still think it's cheap. The market doesn't care if you think it's cheap. I only care about making and losing money in the stock market. So
fair point. Ryan, do you want to talk? We only got a minute left here. Your portfolio update with AST Space Mobile?
We can save it for another time. I do want to ask, like pseudo announcement. because we got Braden on the show today. First of all, kudos to our Series A. Anyone that doesn't know, you can check it out online. Fiscal.ai raised $10 million. Can you give some of our listeners context around the name change? Why did you decide it was time to go from FinChat to Fiscal.ai?
There's 3 reasons why we needed to change the name fundamentally, rather than like, oh, we really like Fiscal.ai, we're going to change it to that. So there's 3 reasons why we need to change the name. One is people thought we were strictly a chat with financial data application rather than a full-fledged terminal. And as we talked with more enterprisey institutional type users, they were coming to us with that and then going like, oh my God, like this is better than my current terminal setup. And we have 2 Bloombergs for a 15-person office that we're all sharing. Everyone else should have a subscription to this. And we're not going to replace our terminals, but this could be complementary. So that was happening a lot. The second reason was IP issues with the chat name. We don't need to bore ourselves with that. And the third reason is with banks, it was getting blocked because anything chat AI in the URL, most large banks were just banning it as like a site you can go to because they don't want to have people put their data into these LLMs, like sensitive customer info. So we'd start like a trial, like our demo with the bank, and I'd be like, yeah, just go on there and like start your account. And they're like, oh, like it's blocked. That's why we reached out to you to get a demo. And then I'd get like 8 months later, I'd get a notification that it was unblocked. It's like, okay, I completely forgot about our conversation. So it was really messing up our sales cycle. So we need to change the name. Fiscal.ai came up because, one, we thought it was a fantastic domain name that was available. The name wasn't being used. 6-letter English word, fantastic. That means finance. And I did some research. It is one of, if not the most used English word on our entire platform for a word that I thought was very related to like government policy at first. I was like, oh, wow. Every public company reports their fiscal Q1 results, or, welcome to our Q1 fiscal earnings call, this and that. And they're reporting their results. And that's at the end of the day, what we're doing is we're aggregating and displaying financial data off these companies who report them. So we thought it was a fitting name.
Oh yeah, I'm biased, but I like the name change. It always feels a little weird at first, but hopefully it'll sit well over time. Any other closing thoughts for you, Brett?
Don't think so. Yeah. Link to Fiscal.ai is in the show notes. Get in it yourself. A nice discount. Plenty of listeners have signed up, so we appreciate that. I'm sure Braden and Ryan do as well. Let's hit the disclosure and we'll get out of here. We are not financial advisors. Anything we say on this show is not formal advice or recommendation. Ryan, I, or any podcast guest may hold securities discussed in this podcast, may have held them in the past, and may buy, sell, or hold them in the future. Thank you, everyone, for tuning into this episode, joining the live stream that goes on every Thursday on the Chit Chat Stocks podcast YouTube channel, but listen to the recordings on YouTube, Spotify, Apple Podcasts, wherever you get your podcasts, and we'll see you next time.